tactics for selecting A&E firm business insurance. This is presented by Heffernan Consulting as well as PPIB Select. We are so happy that you can join us today. My name is Phaedra Buxman, and I'll be your moderator. I'll be monitoring any questions that you may have throughout the session. But before we get opened up, let's go ahead and cover a couple of key items. So for today, as on your screen, you should be able to see my desktop, which has the Heffernan webinar registration page. If you scroll down to the title of today's webinar, you will see there is a PDF, and our presenter, John Feeney, has provided a presentation summary for you there that you can download for future reference. As well as on the same screen, there are listings for upcoming webinars. We have another one next week, which is Successful Separations, as well as in April, Obama's Department of Labor proposed fiduciary rule and what it means for your retirement plan. That's highly informative. We also offer the Preventing Sexual Harassment webinars, which are mandatory. And up at the top of the page, you can click on that link, and you'll see that we have one in June, one in September. Those are in English, and one in Spanish. I updated that date yesterday to 2015, but maybe it didn't hold true for us. All right, so now you know where you can get a copy for the summary of the webinar, where you can register for future webinars, and let's go ahead and talk about if you have any trouble with your internet connection during the webinar, we do recommend that you leave the presentation and then log back in. If you have any audio difficulties or the telephone line goes dead, please hang up and call the same number again. If all of the lines go dead, watch the on-screen chat box for an alternative call-in number. We want you to feel free to ask questions or provide feedback. And you can do that during the webinar using your chat or text box. If you're using a tablet, you may have to tap on the screen to get the options bar to come up, and then you would select the appropriate option to provide your input. We may not be able to respond immediately. However, we will try to work your suggestions and feedback into the presentation. If we can't get to your question or comment during the session, we will stay online afterwards for a little while. You may also email us. Our email address is moderator@aspenrmg.com, as well as on the summary list is going to be John's contact information for you. This will be a 1-hour presentation, and again, questions and comments are encouraged throughout. I'm going to turn the screen over to John, and he's going to share his desktop and his presentation with us. And while he does that, I am going to go ahead and provide you a little bit of information about John Feeney. He is going to be our presenter. He is the Vice President at PPIB Select, which is an insurance brokerage that has focused on servicing the business insurance needs of the design professional community since 1982. He has designed, sold, and underwritten insurance on a senior level basis for over 30 years and is a frequent trade associate lecturer at AIA, SEAOC, and ACEC, in addition to serving on the SEAONC's Professional Practices Committee. John, we can all see your PowerPoint at this time. I'm going to turn the presentation over to you and mute myself. I'll be here as you need me.
Hello. Thank you for attending the webinar today. This is going to be a repeat of a webinar that we did before the National AIA, and we had some pretty good reviews on it, so we thought that it made sense to hold this webinar periodically to give people ideas about the right kind of decisions to make when purchasing business insurance. Our learning objectives today are to review and discuss professional liability and commercial general liability policies, get an idea about how, when you fill out an application, the premiums are determined between the underwriters and the insurance brokers, and get an idea behind the scenes what type of premium credits are available and how to potentially contain premium debits, and then what information you should expect to obtain from insurance broker quotations. As you can see from my bio, I've done a lot of things in my life, so I've been on both sides of the fence, both as an underwriter and as an insurance broker. So today's speech is based on real life experience about the kind of information that comes in from insurance brokers and how underwriters utilize that information to come up with pricing. Hopefully you'll find some useful tips today. You can also follow me at LinkedIn. You have a little over 500 firms that do follow me right now, and various risk management articles that we put out are available for you automatically once you're on my LinkedIn file. So let's get into some of the insurance policies, the core insurance policies that A&E firms purchase. And before we start that, I have a polling question. The two policies that we're going to discuss today are professional liability and business office package policies.
All right, John, I'm going to go ahead and launch the polling question on the screen for our attendees so that they can click on the answer that they feel suits them the best. So does your firm currently purchase both professional liability and business office package insurance policies? So go ahead and click on one of the answers provided. Yes, both policies, just professional liability, or neither policy. And I give everybody about 45 seconds. And I know that doesn't sound very long, but you'll see after you've done a few polling questions, you're pretty quick on the clicker, and then we can go ahead and move on. It looks like just about everybody has already provided their answer for us. So John, I'm going to close that down, and I'm going to share that information with our attendees. And I know that you can't see the actual screen, so you know 67% of our attendees have both policies, 33% have just professional liability, and 0 have chosen neither. So I will turn the screen back to you.
Okay. It's good to know that information because one of the things with business office package policies is it's probably one of the more misunderstood policies as to the reason why it should be purchased. So on this particular screen, we attempt to explain what is professional liability coverage. There's a couple, and how it contrasts with commercial general liability policies, which are a component of a business office package policy. So professional liability policies are something that most people who purchase it have an idea about what it covers. But the simple way to remember what this coverage is about is it covers 3 things. You'll see in the first bullet point that it covers bodily injury, property damage, and economic loss claims. So as an architect or an engineer, when you design a building, there's a potential for people to be upset about the design, it doesn't function properly, that's an economic type of loss, or heaven help, the building collapses and there's property damage which needs to be corrected, and possibly someone gets hurt when that type of situation applies. That would be bodily injury. Now, this all connects to, as you'll see in the boldface print, your professional service activities. That is in the design of a building if you're an architect, for example. Now, this differs from a commercial general liability policy, which is a component of a business office package policy, in that you'll notice it only covers bodily injury and property damage claims, not the economic loss side, and also from non-professional service activities. Where this comes into play most frequently is if a job site situation where a worker gets hurt and you get named in a lawsuit because of your special expertise. You should have noticed that that situation which caused the worker to be hurt occurred. And you have an obligation because of your specialized knowledge to let someone know that that situation existed. So you get named in that suit and you could be held accountable for that. More often than not, you can get out of that type of claim, but it still costs money to protect yourself from that scenario. The second scenario where commercial general liability comes in handy is what we call construction defects, meaning after the project is over with. And it usually results in a scenario where their contractor's means and methods are questioned and you get dragged into the claim as well. And it doesn't involve your design services because the way people sue in this state and most other states is they don't really get that selective. They just sue everybody and then you have to prove your way out of it. So for professional liability policies, they also apply on a claims made basis. Claims made means whatever policy is in place the year that the claim is made pays the claim. The benefit to that is that each year, for those of you that purchase professional liability, you know you can either increase or decrease or keep the same limit in place. So the nice thing about a claims-made policy is you can adjust your limit whenever you want to. Business office package policies, they're kind of like a homeowner's policy except designed for business. So the type of policy, we talked a little bit about commercial general liability already. If you look where the asterisk is, you can go a little bit lower. Commercial general liability has 4 separate sections within it. The first one's premises liability, which is if somebody gets hurt at your office. The second one is operations, and that's while the construction operations are going on. Completed operations is the coverage that exists after the construction operations are over. That's typically a construction defect type of claim. And then we have products coverage. Now, products coverage for an architect or an engineer is relatively meaningless because that's really what your professional liability coverage applies to protect you from. The issue is that try to talk a client into allowing you to buy 3 parts of the policy and not 4. That's pretty difficult to do. So when you buy a commercial general liability policy, you get all 4 coverages. On the property side we'll talk a little bit later on. I have a screen on that, but it's also very important coverage. With business office package policies, there's very special A&E programs. There's very few companies that offer the type of programs because of the unique nature of that type of policy. And architect and engineer policies pretty much mimic what construction contractors carry, and that is unique. Now, you'll see in the last bullet point that they apply on occurrence basis. That's different than claims made. If you'll remember, the claims made occurs, the limit that's in place when the claim is made pays the claim. With this type of policy, when the claim is made, the policy that was in place when the occurrence happened pays the claim. That's philosophically the opposite direction. So I've got an example here about how that works. Let's say a person's injured at a job site in 2009. And let's say that you had both these policies in place, but you canceled them in 2011. And the lawsuit's filed in 2015. So using the occurrence and the claims made theory, the claim was made in 2015. You canceled your professional liability policy in 2011. You don't have insurance for that type of claim. With the business office package policy, which applies on an occurrence basis, the claim was occurred in 2009 when you had the policy in place. That's when the occurrence occurred. So you do have coverage for it. So in this type of scenario, your professional liability policy does not respond to pay the claim, but your business office package policy under the commercial general liability component does. Hopefully that's a pretty good example to give you an idea about how these policies work. Last thing, I'm going to touch just lightly on an umbrella liability policy. And this is a policy that sometimes you're required to carry. And what it does is it provides an additional limit over your commercial general liability, an auto policy if you carry it, and then the part of your worker compensation policy, which is known as an employer's liability policy. It does not provide excess coverage over your professional liability policy. Here's an overview of the type of the number of insurance companies that offer A&E-centric programs. So in the United States, for professional liability, there's roughly 36 that offer insurance coverage in California. That's quite a few companies. But that being said, California is one of the more difficult states in the United States. So as you'll notice, there's 55 total in the United States, but not all of them are interested in California. It's because of the litigation environment. For business office package, nationwide, there's 5. One of them is going to disappear. It's a firm called Fireman's Fund. The company is being wound down by its parent company, so pretty soon there'll only be 4. Let's get a little bit into the insurance broker selection process. I bring this up because many times when insurance brokers talk to clients, and they're interested in a quote, we just find that the process just sort of implodes on itself. So I'm giving you some ideas about how to actually manage that process, of which you'll see them in the handout that I also gave you. So if you're interested in working with a different broker, in addition to your current broker, this is how you go about it. So initially, the role of the broker just needs to be understood. So before you work with a broker, you have to get an idea about how good they are at these points. So one, determine whether they have an idea about what you do with your business. In other words, ask them some questions about what they have an idea about what your exposures may be, and maybe ask them for, based on your experience, what are solutions. The insurance broker should have a pretty good idea about what kind of application or attachments to applications that apply to your business. Don't let a broker just send you an application, not talk to you, fill it out, and they run off to the market hoping that someone makes their day. That happens a little too often. I've experienced that many times when I was an underwriter in my past life. Also, you want to get an idea that the insurance broker is an experienced negotiator for architects and engineers. And you want to get some kind of idea that they have established relationships with insurance companies. The other roles of a broker are identifying the pros and cons of insurance company options. In other words, having an idea about what's actually in the policy. Professional liability policies are not the same. They differ quite a bit. They're all drafted independently. While there are some similarities to it, there are also some very important differences, and the broker should be aware of that. From a risk management perspective, there's two options there. One is what does the insurance broker offer, and what does the insurance company offer, and obviously there's differences. In addition to the claims side, you should also expect the insurance broker to be a risk management advisor from not only an insurance perspective, but non-insurance policy perspective. So key items that insurance brokers that focus on this type of business offer are insurance risk contract reviews, meaning they look at the contract that you're considering entering into, and they give you an idea about the insurable risk. What's insurable, what's not. And also they manage your insurance certificate process, and they're an advocate when a claim occurs. So having knowledge of what the policy form helps identify situations where an insurance company might accidentally not respond in a manner that you would have anticipated. Brokers get involved with that. Here's our next polling question.
Okay, let me go ahead and launch that for you. All right, everybody. In the past 2 years, has your firm requested an insurance risk contract review from your insurance broker or company? So go ahead and select on one of those options that is there for you to answer. And we'll give everybody just a little bit of time to provide that information. See, look how quick you are already. We're almost 75% in with our voting, and it's only been 30 seconds. I told you this part's a breeze. All right, we'll give you just a couple more seconds, and then I will share your information. Okay, John, 8% of our audience said yes, a review performed by the insurance broker. 17%, the review performed by the, the first one, 8%, insurance review performed by insurance company. 17% is the review was performed by the insurance broker. 0% performed, not performed, and performed by the attorney. 75%, no reviews were requested. I will then turn it back to you.
Okay. This is a fairly common answer that comes back from the various presentations I've done around the state of California on a national basis. And it's because a lot of people don't know that the brokers actually do perform this role that focus on the architect and engineer industry. It saves you legal fees and also gives you an idea about where your policy covers you and where you're assuming the risk. They also give you solutions in terms of how to solve the problem. There's a distinct difference between how the insurance company does it and how specialized insurance brokers do it. The insurance companies that perform reviews are the professional liability insurance company. Their reviews are limited just to the commercial or the professional liability perspective. They make no comments concerning commercial general liability. They have a tendency to focus on the indemnity agreement and the insurance requirements, but not other parts of the agreement. Insurance brokers, on the other hand, that focus on this are more aware and of different issues because they're responsible for more policies than just the professional liability. So they give you comments on the professional liability, on the business office package, and then they look for other provisions in the agreement that also could be involving insurance risk. For example, by our count, there's a little over 120 different topics potentially in a client agreement that could involve insurance issues. So it's a fairly complex process, and it's a benefit that you can get from your broker and also from the insurance company. On the insurance company side, like I said, their limitations are that they perform it based on professional liability only. Reviews performed by an attorney, that's always a good idea. The issue is you have to make sure that the attorney has an idea about how insurance policies work. And not every insurance attorney has been hired by an insurance company to represent the insurance company, and that's the type of attorney you want to talk to, because when they look at the contract provisions, they can make the connection between whether an insurance company would cover the policy claim in question or not. So I hope that gives you a little bit of background on it. Contract risk reviews are very important. So following up on this insurance broker selection, using multiple brokers. Everyone's goal should be to end up with the right insurance company, but also the right broker. There are a number of situations where you're with the right insurance company, but the broker that placed you with that company just isn't as knowledgeable as the other broker. So you can have a situation where you have the right carrier but not the right broker. The options for you are to sign a broker authorization letter switching brokers. In other words, thanking the broker for finding the right carrier, but you need more services than the broker is able to offer, so that's why you would switch brokers but keep the same carrier. In terms of interview criteria, we talked a little bit about this, and these are some bullet points that I think help give you some ideas. So in our world on the insurance broker side, there are some trade associations that brokers have created who focus on architects and engineers. The first two are the trade associations. AE ProNet, of which our company actually created back in 1982. It's a linkage of brokers all around the United States. And PLAN, which is another rival group. And then if they're not members of those two groups, then it's important to determine whether they're members of PLUS, which stands for the Professional Liability Underwriting Society. That means that they've taken questions and tests related to professional liability. And it's a very unique association. They don't focus necessarily on architects and engineers, but they do have a decent understanding of professional liability overall. The final category is CPCU. That's more for commercial general liability. But at least it indicates that the broker's taken a very difficult test to try to understand your policy beyond just being able to sell it. The second category is determine what insurance company relationships the insurance broker has, and ask them what the percentage of business is placed with the top 3 insurance companies and the type of access. Access is important because many brokers do not have direct access to the underwriter. They work with an intermediary insurance broker who routes it to the underwriter and does the negotiations. Intermediary insurance brokers don't always understand your business as well, so it's better to have direct access as much as possible. We talked a bit at length about insurance risk contract reviews, and it's definitely a good idea to ask any broker you're working with, saying, let me see a couple sample broker insurance risk reviews that were done. That way there you can determine, maybe even before these other questions are asked, whether you like the reviews or not. That helps you determine the right broker. On the next page, if you're going to use more than one broker, you need to manage the process. So if you decide to pick another broker to negotiate on your behalf, assign them a fair number of insurance company options. Don't let them race out in the marketplace and send it out to every company out there, and the other broker sends them out to the same companies, and then there's an overlap, and then you've got all these people coming back to you. In other words, assign specific company names to each broker. Then in terms of the proposal that you receive from the broker, request similar content from each broker so you understand on a level that's equal what they're proposing. All too often insurance brokers give you just the limit, deductible, price, and then they make some comments about it's a good policy. Personally, I don't think that's good enough. They need to go into more detail. Secondly, once you get your proposals back, you need to have enough time to talk to them further, address different subjectivities, meaning what else does the underwriter need to be able to purchase the policy from them, and then you need time to get your certificates of insurance out before the policy expires. This is one area where sometimes this falls apart. Brokers get the quotes out last minute, and there's just simply no time to change simply just because certificates of insurance need to go out. So stick to the timetables that you want if you're going to work with multiple brokers. A little bit about professional liability coverage from the perspective of the application process. So advanced preparation is important for professional liability. So these are some of the ideas, or some of the steps that you need to keep in mind. Most brokers are really good at setting out applications 45 to 60 days in advance of the renewal of your policy, so this shouldn't be a big deal. Secondly, if you're going to work with another broker, apart from your current broker, then you need a copy of at least 5 years loss history if you've had insurance for 5 years, so you can give it to the other broker. Third is you need to figure out what your last 3 years worth of billing information is, and oftentimes insurance companies ask for what your projected next year billings are going to be. The reason for this is that with architects and engineers, insurance companies don't rate it on your last year's of billings. They rate it over your past 3 years worth of billings. Generally what they do is they add the 3 years of billings together, divide it by 3, and that becomes what we call your weighted average billings. There's logic behind that because with architects, the average claim occurs somewhere midway through the second year after construction is finished to the end of the third year. Historically speaking, 75% of all claims are finished for architects by the end of the third year, with, like I said, the majority of them occur midway through the second year into the third year. On the other hand, if you're a structural engineer, most of the claims come in by the 5th year, with the majority of the claims coming in the 4th and 5th year. So there's like a 1 year or 1.5 year difference between when architect claims come in and when structural engineer claims come in. So we talked about that, assigning specific insurance companies to brokers, and then the timetable. So with respect to applications, one of the things that you may find is that your brokers might recommend different applications. You don't need to complete 2 different applications. What you need to do is look at the applications and figure out what one's right for you. So for example, if you're a smaller firm, there are applications that are designed for small firms that do not ask questions that have nothing to do with your business. They're designed more for larger firms, such as, do you have written procedures in place for this or that? Well, why would you? You're a 2 or 3 person firm. Small firm applications don't take those types of questions into consideration, and by not having to answer those questions, you avoid having inadvertently a debit assigned to your pricing because you do not have written guidelines in place. So these applications, as I say in the bullet points, are to get your credits and contain debits, as I mentioned in the prior example. In applications, they oftentimes do not allow enough space for you to answer questions. So a term that I use is attach an attachment A, where you give additional information where there's not enough space in the application to fully answer a question. And then if you have any claims questions, the claims questions in the applications are very important. So they usually ask if you had any claims. You definitely know that. The next question is, are you aware of any potential claims? Now, awareness of potential claims includes you and anyone on your staff. So if you had people come over from another company, the way those questions are worded is it's worded unique to the architect, not to the company, but unique to the architect's experience. So asking the people on your staff or engineer, whoever's licensed, those questions is important. I used to work for a very large firm that had 65,000 employees. Anyone that was in senior management was independently asked that question. So the file was documented that the insurance, that when they filled out the application, they did their best to figure out whether there was any actual claims in place. You do this so because these policies are warranty type of policies, if there's a misrepresentation on the application, which is this is one area where it can happen, what more can you do than survey your staff to prevent having an insurance company take that position? Sorry about dwelling so much on that question, but it's a very important question to not overlook. How is pricing determined? So once this application is sent off to the underwriter, what do they do? So this 2-step formula, this is a little oversimplified, but for purposes of our speech, it gives you a good idea about what's going on. So as I mentioned before, they take your last 3 years worth of billings, divide by 3, and come up with what your average billings are. The price is based on per $1,000 of billings. So if you took your premium and divide it by your weighted average billings, which is take your last 3 years of billings, divide by 3, you get an idea what your rate is per $1,000. Then prior acts coverage factor. And companies give you a big discount when you first buy your policy. That discount varies from, depending on the company, 15% for travelers, 25% for most of the insurance companies, and then there's a few companies out there, such as Hanover, that gives a 50% discount for no prior acts. So having your broker be aware of what the credit is for no prior acts can save you a significant amount of money when it comes time to purchasing coverage. Now, that credit goes away over the next 5 years, but you get advantage of the credit, and you might as well take full advantage of it, as it lowers your price. Then for California, there's territory factors. For example, California versus my home state of Illinois, California is about twice the price for professional liability coverage because home values are so much higher, property values are so much higher, and has a direct correlation on what claims end up being. And then within California itself, the underwriters view Los Angeles and San Francisco as being higher exposure areas, and then San Diego and the balance of the state being lower exposure areas. Then you get into professional service factors. So what is that? That means, are you an architect, are you an engineer, are you an interior designer? There's different factors. So for example, interior designers pay a lower rate than an architect or an engineer does. On the other hand, if you're a structural engineer, you pay a higher rate than anyone does, unless you're a geotech. Geotechs are the highest of anybody because of their exposure. Next step is they look at the project types. So do you work on offices, do you work on condos, do you work on homes, do you work on manufacturing type of projects? And the underwriters have a little debit that applies for homes because they result in emotional type of claims, and some underwriters just don't like homeowners claims because of the emotional aspect of it, and they're difficult to fend off. So that's why there's a debit there. Condos, as we all know, are very difficult type of projects, and they are very expensive. Many groups are involved in it, and it's just hard to get out of the litigation. On the other hand, offices and restaurants are good because, generally speaking, the owner is a little more sophisticated, and they just have a tendency not to have the emotional type of claims that you find from residential type of projects. Then there's various debits and credits that can apply. As we mentioned, it's how you answer your questions in the application as to whether you get a debit or credit. Then insurance companies have special credits based on your claims experience. So you can save as much as 15 to 25% off your pricing if your claim's free, and somewhere in between or above, depending on what your claims are. Now, just as a note for claims, insurance companies in this business, they are regulated by the state insurance department, so they can't get too crazy in terms of how they price your policy based on claims experience. So, for example, I used to do these kind of pricing things in the past. With underwriters, if you have up to 65% loss ratio over the last 5 years, that's adding your premium and adding what claims are paid, you still aren't in the debit mode. There's no debit. So underwriters expect to pay claims under these policies. The debits kick in when you get over 65% loss ratio. The final two steps are what limits you want and what deductible, and certainly there's different factors involved in that. For example, if a $1 million limit costs $3,000, buying a $2 million limit is about 20% more premium. If you have a $5,000 deductible and the price is $5 and you want a $15,000 deductible, you probably get about a 15% credit off that pricing. Optional coverages, there's some people out there that have what we call project-specific limit endorsements on their policies, and any broker needs to be aware if you have one. Sometimes that's not mentioned and it's missed when the pricing goes on, but project-specific limits, for those of you that are familiar with it, are unique and not requested too often, but they're important when they're needed. The final step in the process is, in California, for example, they can give you 25% credits and debits depending on how much they like your business practices. So what I've attempted to do here is outline the different business practices that underwriters look at, and in boldface print are the most important ones. So quality of contracts. You use AIA agreements. If you have your own agreement in place, how close is it to an AIA agreement or an EJCDC agreement? Because those agreements are very well designed to protect you in the event of losses. Types of clients and project owners, while it's important, it's not as important as the next one. Types of projects. So for example, if you work in offices, there's high-rise offices and there's low-rise offices. So if your business, your projects in the office area is lower rise, then some of this 25% credit can be applied because in that category, you are in the lower exposure portion of it. So they can apply some of this 25% maximum credit based on what your project mix is. So on attachment A, if the application doesn't say what percentage of your offices are high-rise versus low-rise, you should volunteer that information so you can tap into that credit. Internal loss prevention. You'll see the questions in the applications. How many seminars have you attended, which is kind of listed below. But it's also how well you respond to identifying different issues that could result in claims. Do you have peer review done between your staff, or do you have a relationship with another firm that reviews some of your work to see whether it's put in place? Or internal loss prevention could be such as if you hire subconsultants that you request certificates of insurance in place and make sure they have proper limits in place, and work with people that carry the same coverages that you're required to carry, because sometimes you might hire a subconsultant that carries professional but not commercial general liability, yet your client requires both. To a lesser degree, they give you credits for qualification of staff, continuing ed seminars like we're talking about right now, and then international work is generally a debit because obviously your contract gets interpreted in a different language and it's just a higher exposure. We get into business office package policies. From an advanced prep stage, 1, get the application from the broker, 2, 5-year loss history. Then in this area, it's important to review what your current additional insured list is, because if you're thinking about working with another broker, have that list together. You might find that some of the additional insureds no longer need to be on your list anymore because you don't have any obligations to add them as an additional insured, so you should review whether that list is current or not. Once again, like the professional liability, don't let 2 brokers run to the same company. Make sure that you have specific companies assigned to each broker. When you ask them the questions, they'll give you the names of the company. And lastly, always have that timetable and stick with it. For business office package coverage, the key liability limits are commercial general liability. And most people buy commercial general liability to just meet the client required limit, but you may want to consider a higher limit because commercial general liability, while it's a benefit to your client, it's also a benefit to you. So for example, if you're a tenant in a building and a fire occurs and that building's damaged, that policy all of a sudden becomes important to you because under commercial general liability, it covers property damage. That doesn't mean necessarily property damage at a client site, but it goes to be property damage because you were the source of the fire in your building and you owe the landlord money to repair the property damage that was created by something that happened within your office space. The other coverage, which is kind of misunderstood, is under a business office package if you do not own business autos. So if you use personal autos for company purposes, you can buy an endorsement called non-owned auto and hired auto liability. Very important coverage, not discussed too much by brokers. But a good example of that would be non-owned auto coverage. You are required by a client to go to a job site and be there at 9 a.m. and you're driving down the 101 and you hit somebody going 45 miles an hour. That could be a significant injury to the person that you hit. The type of claim that could come back under that type of situation is against your State Farm policy for your personal auto, but to also name your business. It doesn't take too long before a lawyer asks were you driving your car for personal reasons or for business reasons. The portion of the claim that's against your business is not covered by your personal auto policy unless you have an endorsement to a business office package policy covering non-owned and hired auto liability coverage. Your client can also be named in that type of suit because the allegation can come back saying, not only were we hit by you at 9 a.m. in the morning, but we really believe that your project owner that was making you come to the project so early could have had you come later, in which case you never would have hit my client, no one would have been hurt, and I'm holding your project owner accountable for you having to be there that early so they can see your project owner. And under these types of policies, you can cover your client as an additional insured. So if they get named in the suit, they're protected under your policy because you were the one that created the situation that dragged them in that claim. So additional insured endorsements for this type of policy are critical for client relationships and also protecting you from unnecessary lawsuits from people that could already be covered by your policy. So the application process. We get into this property coverage. We talked a lot about liability, but under property coverage, there's a number of coverages that are involved. And if you ever look at one of these policies, it's really hard to follow them. There's just such a long list. So what I took here was the important coverages. I'm going to make an assumption that you rent, that you don't own the building, so we're not going to discuss much about that. So when we get into the special property categories, there's 3 of them that are worth really talking about. First one's computers and media, second one valuable papers and records, and the third one electronic data. So for example, computers and media, pretty easy to understand, but sometimes the media part is not. So when you pick your limit under your business office package policy, it's not just your computers, but it's also the software and the hardware that you have, in addition to all the peripherals. For valuable papers and records, that is paper, books, different blueprints, which are somewhat obsolete, I guess, nowadays. And then you get to the next one called electronic data. That's really what valuable papers is turned into today. Most people's instruments of service are switching from a paper-based record to an electronic-based record. So electronic data, how do you figure out what that's worth? Very difficult. The best way to figure it out is, do you store your data on your computer only? Or do you store your data on your computer and a hard drive? Or do you store it on 2 hard drives, with one of the hard drives not next to your computer but stored elsewhere, or in a fireproof safe? That makes it a lot safer because your lost electronic data is a lower exposure, or you have those types of protections plus you have it stored in the cloud. Under these types of policies, you have coverage to recreate your electronic data. Electronic data could be affected a couple ways. 1, from a fire. 2, there could be a power surge that goes through your surge protectors and fries your hard drive. You have coverage for that. Or there could be a virus that affects your data, and under certain policies they have sublimits for virus protection. This type of coverage is something that's very important between the valuable papers and electronic data for a couple of reasons. Apart from just protecting yourself, when you meet with clients, it's very useful to bring the fact up that you have coverage to protect the records that they're hiring you to create. If you bring it up and no one else does, that might be the reason you get the job opportunity. The final category is a thing called business personal property that I'm going to talk about. I didn't highlight it, but the reason why is that most of what small business architects and engineers have fall in categories that are bold-faced. And what's left is personal property. Many of the policies I see have way too high limits for business personal property because they include within the net limit what their computers are worth, what their valuable papers are worth. And it should be taken out because these business office package policies all have separate dedicated limits for those 2 coverages. So for example, this would be your desk, your wall units, your chairs, things that aren't related to valuable papers, electronic data, or computers. And as you can see, you may possibly, when you look at your policy, have too high a limit for that coverage. A good broker can help you make the right decision process on that. There are other limits that apply under a business office package. Because of time constraints, I'm not going to dwell on this too much, but accounts receivable, for example, if you had a fire, the insurance companies actually help you recreate your accounts receivable and help you with the process of trying to collect from people who you've got all these other things going on and you need the insurance company help to try to make sure that you get paid. And then there's earthquake sprinkler leakage. If you're in a building where there's sprinklers and an earthquake triggers the sprinklers, you can buy separate coverage for that. Business office package coverage is very easy to determine how the pricing is done for the commercial general liability. Most insurance companies fall in 1 of 3 categories. They charge based on your overall property policy limit, or they charge it based on the square footage that you occupy within a building, or they charge it based on your payroll. If it's property coverage, it's always based on per $100 of property values. Other important factors that come into these types of applications, for those that you've completed it, you'll notice that they always ask questions about where are you located at and what kind of security features are within the building, with the most important of these factors being when was your building updated for plumbing, roof, heating, and wiring. And naturally, it's going to be loss history. Broker proposals. As we mentioned before, proposals are important, and you should get consistent information from your broker on this subject. The most important factors are the 3 that I have bold-faced. But the other ones are very important too. They're just not, I'm just not emphasizing it for purposes of this discussion today. So one, limit and deductible options. It should be clearly understood what limit and deductible applies, and if you're interested in knowing what the next highest limit would be, instead of requesting just one limit, request two. And you get an idea of what the cost would be in case some client asks you to increase your limit by $1 million. You have some idea of it in advance. You want to make sure you have a proper list of covered firms, plus any prior firm names, which the insurance industry uses in their applications as the word predecessor firms. These policies are very anal, meaning that if the firm name is not listed, then it's not covered. Special policy provisions. In the types of policies, there's different provisions that apply. Some have pollution coverage on what we call an enhanced basis, and other ones have standard coverage. That may be important to you depending on what your situation is. Other policies have provisions where the insurance company can settle the claim or recommend to settle the claim, and if you disagree, you're on the hook to defend yourself after that point. And a few other ones have a provision that says that if you disagree with the settlement that they propose, the insurance company cannot force you to settle. They're still on the hook to defend you. Being aware of those provisions, which are more often than not mentioned by insurance brokers, is critical in the decision-making process. You get into this extended reporting period, kind of a misunderstood coverage, but the number of years can be important depending on where you're at in your life as a business. So most of the policies out there offer 1, 2, or 3 years to buy an extended reporting period. An extended reporting period just means that if you canceled your policy, it stays alive for the number of years that you choose to purchase this type of coverage to pay for claims that could come up after you canceled your policy. So most of the companies offer 1, 2, and 3 years. There's a few that offer up to 5 years. So when you enter into agreements with clients, it's critical to always look at the insurance part to say how long are you obligated to keep your policy alive, and try to contain it to no more than 5 years. And the reason for it is that you're trying to make sure that if you decided to do something else with your life and had to cancel your policy, that you could purchase an extended reporting period to meet that obligation. Also, some insurance companies offer multi-year policy options, and it should always be, investigated to find out if they're open to doing that for you. So in other words, you pay the same premium for 2 years, don't have to fill out a new application, and if you have a banner year the next year, you don't pay an additional premium. You get locked in for the same premium for 2 years. Proposals should also include AM Best rating, and you should also know whether the company is admitted or not admitted. Admitted means that if they fold, go out of business, then the state insurance department assumes the role of being your insurance company, whereas if they're not admitted, if they go out of business, that's it. There's no insurance company, there's no backup for it. AM Best ratings can be overblown a bit because if you remember a company called AIG Insurance Company, they were rated A++ by Best before they were taken over by the U.S. government. But still, it is a good indicator about how solid the insurance company is. They should at least be A-rated, and they usually have classifications next to it like A with Roman numerals, and the minimum rating should be A-class 8. Insurance broker and insurance company contract review capabilities should be outlined in the proposal. In our proposals, we mention whether they're enhanced or not, and we have a little description about what enhanced means versus non-enhanced. And then you should know in your proposal what you need to do to address last-minute issues to get coverage in place. Underwriters might have a few extra questions. So that's why you need that extra time to address these issues. You really don't want any last-minute surprises. And then some insurance companies offer interest-free payment plans. So knowing what the payment plan options are, apart from a finance agreement, is important. In terms of business office package proposals, you'll see they're pretty similar requirements. And the other issue is for special policy provisions. You'll see in there that I mentioned additional insured coverage, separate limit per project. You know that if it's got the right type of additional insured endorsement and that there's a separate limit that applies per project, meaning that every single project has its own dedicated limit, then you know you're in an architect and engineer-centric program. As I mentioned before in a prior screen, there's very few companies that offer that. These are two items that will be your indicator whether you're in the right program or not. And then naturally subjectivities if the underwriter requires any, and payment options. Changing insurance company checklist. So before you change insurance companies, you just want to make sure that you got a good idea about what your current policy is and what the proposed policy form is, and that you like the benefits and the new policy form to switch. And then, as I mentioned, it's nice to get an idea about what the extra million limit is in terms of pricing, because some insurance companies have a higher cost for additional limit versus the one that you may be looking at. So it's important before you switch companies to know what the cost would be for an extra million limit. And then you want to be also comfortable that the insurer's appetite for potential changes in your mix of projects is there. So for example, if you're, right now they love you, but if you decide that your residential mix is going to go from 30% of your projects to 60%, they may not love you anymore. So asking that question about, in the next year or two, we might dramatically increase in the residential side is important to get an idea about how the insurance company will treat you at that point in time. The other next page is sample checklist is make sure you got all the business entities covered. Also make sure that any potential claims or incidents have been researched and reported to your prior insurance company when you're moving to a new one. And then make sure all the subjectivities have been addressed, and make sure you've got an updated certificate of insurance list. Lots of times we issue about 1 million certificates each year for our clients, and sometimes we send insurance certificates out that really don't need to be sent out because the requirement to send them a cert had already expired. So re-reviewing your certificate of insurance list is important. Here's our final polling question.
Okie dokie. Let me go ahead and launch that last polling question for everybody so they can share their answers with us here. All right. What part of this presentation did your firm value the most? So if each one of you will take those few seconds to go ahead and click on the answer that you like the best, and then after everybody has had about 30 or so seconds to share their input, I will go ahead and share that with everyone, and we'll wrap up here with the final portion of John's presentation. So it looks like we are just almost all in with our voting, so I'm going to go ahead and close the voting down and share those percentages with you all. Okay, John. Sorry, every now and then my screen changes sizes here and I have to drop it back. Give me 1 second. So 25% of our audience felt that taking control over how insurance prices of the policy are done is their most favorite part, and 50% about the requesting proper content in broker proposals. The other 25% of our audience liked how to properly switch insurance companies. So with that, I will close that back down, and John, the screen is back to you.
Very good. So the last screen, I have a tendency to like the Monty Python Search of the Holy Grail movie, and if for those of you that have seen the movie, this is the bridge where if you don't answer the question right, you get jettisoned into the cavern. That won't happen today, but some of you, if you have any questions, this is the time for you to either ask them or send them to us via separate email, and they can be answered later. So are there any questions?
There are some questions. Number one, somebody's extraordinarily excited about Python, but the question is, regarding certificates, I was advised certificates cannot be provided in advance of the policy start date. Sounds like this is in error.
That is correct. The certificates, if you have ordered coverage, then the certificates can be issued. So many people order their coverage to be renewed a week or two in advance. At that point in time, once the insurance company has already committed that they're going to issue your renewal policy, the certificates can be issued.
Okay. And John, what is the key, or what is a key item that we should be looking for with broker selection?
The key item is that they understand your business. If they understand your business, then chances are they work with a number of businesses just like yours, which correlates into having enough business to work with more than one insurance company, which correlates into having more direct relationships with insurance companies. And apart from just asking them some of the questions that we mentioned, reviewing what a contract review looks like by the broker will also give you very good indication about how well they understand your business and the insurance element connection to it.
Okay. And did you mention earlier that there are that it's best to request a specific application for your size of firm regarding PL coverage?
Yes. If you're a smaller firm, you should always ask your broker whether to send you a copy of what a small firm application looks like. That way one, it's a shorter application. Two, it doesn't ask little landmine questions that could result in debits. So what is a small firm? Generally speaking, in the insurance industry, a small firm is safe to bet that if your average billings are under $250,000 a year, a small firm application will apply. Some underwriters will use small firm applications up to $500,000 in billings. So safe to say anything under $500,000 in billings, you should request an application that has some way, shape, or form on it, a logo that indicates it's a small firm application.
All right. And do all brokers get the same pricing from the various insurance companies?
That's a good question. It's one that's difficult for clients to understand, but if two brokers go to the same insurance company, the insurance company only recognizes the broker whose email or letter came in first. So literally, if one broker beat another broker in by 1 minute, the insurance broker that will get the quote will be the first broker. The second broker will not get a quote. That being said, if the second broker did a great job of explaining what your business is, the first broker benefits from that detailed letter that the second broker sent in, because the underwriter's not going to look at the first broker's letter. They're going to look at the second one, yet the first broker benefits from it. That's part of the reason why I said assign one company to one broker only. Secondly, from an insurance company perspective, let's say they did give quotes to both brokers, and let's say one broker did a so-so job of presenting your business and the other one did a better job. Insurance companies are prohibited by law from giving better pricing to one broker who explains your business better than to the other broker. So that would be considered discrimination. They would be fined by it. So therefore, the only one price applies. And let's say in a third scenario that your broker sent in the application and then another broker who you were considering working with sent in the application a week later. If the insurance company had already priced the business based on the first broker's application and the second broker's application comes in later after the price is released and that broker did a better job explaining your business, that price is locked in. You cannot gain a better price once it's locked in by insurance companies. I know it sounds difficult to understand, but that's kind of how it works.
Well, fantastic, John. It looks like that is all of our questions. And again, I wanted to make sure that you all know we appreciate you taking the time out of your day to attend this webinar. I will be sending out a thank you email that has a link to the summary resource page where you can download a summary that John made of today's presentation, which will also contain his contact information if you need it. And we really thank you all for joining us. John, thank you for providing this very valuable information. I hope that you have a great day, and I look forward to speaking to you later.
Thank you.